Welcome to the Deep Dive. We're the show that takes complex topics, dives into the sources, and pulls out the key insights, the really surprising bits, just for you.
And today we've got a really fascinating one. We're looking at the future of Singapore, but through the eyes of someone pushing for some pretty big changes.
Yeah, specifically, we're focusing on Jeremy Tan. He's known for his independent political runs, but also for his, well, quite strong views on Bitcoin, personal finance for Singaporeans, and some really bold ideas on tackling the cost of living.
That's right. Our source is a detailed interview with him, and he definitely doesn't hold back. He challenges a lot of the conventional thinking.
So our mission today, we want to unpack his main proposals, really get under the skin of his investment philosophy. It's quite unique, and explore his specific ideas for making Singapore, more affordable.
We'll be pulling out the most important nuggets and maybe some surprising facts along the way.
Okay, let's get into it. So let's kick things off with Jeremy Tan's view on politics. He comes at it from an interesting angle as an independent candidate.
He does. He offers a different perspective, for sure. He's definitely noticed how social media has, well, completely changed the game in campaigns. He points to examples like Trump.
And he even talks about AI, doesn't he?
Yeah.
Artificial intelligence playing a future role.
Yeah, he suggests AI could become really significant in how campaigns are run, how they reach out to people. It's quite forward-looking.
But beyond technology, he talks about a needed shift within the parties themselves.
He does. He uses this phrase, a mentality reset, especially after COVID. He thinks political parties need to operate more. Well, like a business.
Like a business? How so?
Focusing on the user experience, essentially. But for volunteers, making sure they have a good experience, tracking resident issues systematically, making the whole process of getting votes smoother.
So efficiency and responsiveness, almost like customer service.
Exactly. That's the core idea. And he seems serious about it. And he mentions planning to run again, probably as an independent.
Right, and he's apparently talking to different parties already about reconstruction efforts, as he calls it.
Seems like he's committed to shaking things up a bit.
Okay, let's shift gears to something he's maybe even more known for, Bitcoin. His big idea is for Singapore to become like MicroStrategy, but on a national scale.
A pretty bold statement. He wants the nation itself investing in Bitcoin.
And he has some specific ways he thinks this could happen.
Oh yeah, concrete proposals. He talks about creating Bitcoin ETFs, but specifically in Sing dollar terms.
Okay.
And maybe even more controversially, allowing people to invest in Bitcoin through their CPF.
Wow, through the National Savings Scheme. That's significant.
It is. And he argues that other major countries, the US, UK, Canada, are already heading this way with things like Bitcoin ETFs becoming available. He thinks Singapore needs to get ahead of the curve, or at least keep pace.
But it's not just proposals, right?
Yeah.
He's also critical of the current stance.
Very critical. He describes the government's approach to crypto, especially after the whole FTX collapse, as too extreme and even punishing.
Punishing? What does he mean by that? What policies is he pointing to?
Well, a key one is the restriction on advertising. He says crypto retail advertising is not allowed. So a company like Gemini, for example, can't run an ad saying, buy Bitcoin. But then he contrasts this, saying CFD providers like IG can advertise gold CFDs. He sees an inconsistency there.
Right, and this connects to his point about the CPF too, the CPF paradox, he calls it.
Exactly. He questions the 10% limit on gold ETFs in the CPF investment scheme. His argument is, if you allow that, why not Bitcoin? Especially since he believes Bitcoin has no counterparty risk.
Unlike gold, where verifying the actual amount held can be complex.
That's his point. He finds it strange that Bitcoin is excluded when, in his view, things like risky catalyst stocks or CFDs are allowed within the CPF framework.
So the underlying critique seems to be about the government being overly protective.
Yes. He calls it the protect you mentality. And he argues it actually backfires.
Oh, so?
He thinks it pushes crypto trading underground, makes it less transparent, and ironically leads to more scams because people might falsely assume there's always a safety net. They let their guard down.
Okay, so what's his solution then? If the current approach isn't working, in his view.
It's about bringing it into the light. Allow regulated, known entities he names, Crypto.com, Gemini, Coinbase, to advertise Bitcoin.
So people know where the legitimate places are.
Precisely. He draws an analogy with PayNow, Singapore's instant payment system. It works with just 7 regulated banks, right? That clarity, he thinks, reduces scams. Apply that logic to crypto.
Makes sense. Let people know the safe channels.
And then there's this really unique argument he makes about CPF itself. He frames CPF money as essentially a claim against the government's promise.
A claim against the government. Okay, go on.
So he posits that if the government held Bitcoin in its reserves alongside its, $290 billion in gold, it actually strengthens the government's ability to meet those CPF promises.
Because Bitcoin provides an international market to liquidate assets if needed.
That's the idea. He notes Bitcoin ETFs are already outperforming gold ETFs, suggesting it could be a stronger reserve asset over time. It's a radically different way to think about national reserves and solvency.
Definitely a novel perspective on government finance and digital assets. Okay, let's move on to his personal investment philosophy.
Yeah.
He's got this memorable acronym, BITCH.
Right. Bitcoin indices, Treasury T-bills, CPF, and housing. He says it's his Singaporean twist on the classic IVY portfolio concept.
So let's break that down. B is Bitcoin. What role does that play for him?
He sees Bitcoin as the defense in the portfolio, something that holds up during risk-off periods. He also calls it a real asset, especially important in an age of AI where he thinks things like commercial real estate values might decline. He even predicts it'll eventually supersede gold.
Strong claim. Okay, then I for indices.
That's the offense. Things like broad market index funds, he mentions QQQ, or maybe strategies like VWAP or CSP that tend to do well when interest rates are low and there's lots of money sloshing around. The growth part.
Got it. T is Treasury T-bills. Pretty straightforward.
Yeah, basically cash or near cash. High yield savings, T-bills, liquidity, safety.
And CCPF. We touched on this, but what's his specific advice here?
Maximize the special account, SA contributions. He calls that compounding 4% interest a very, very good thing. He points out that historically, the effective CPF rates haven't always hit the advertised 2.5% or 4%, so locking in that higher SA rate is crucial for him.
Makes sense. And finally, H to housing. Specifically, HDB flats.
Yes, HDBs. He thinks they're generally a very good bet. Why? Because the supply is controlled by the government and the land cost is factored in, which tends to push prices up over time.
Unless government policy changes, of course.
Right, that's the caveat, and it's a big part of wealth here. DBS research suggests 40% of Singaporeans' net worth is in housing, but he also notes HDBs can be very illiquid, and there's often that emotional attachment.
It's interesting how this portfolio ties into other ideas. You mentioned Jeff Park's radical portfolio.
Yeah, there's a parallel. Park's idea is heavily weighted towards MicroStrategy assets, and Bitcoin, it's described as being long resistance and short establishment, basically betting against the traditional system. Tan's approach, while broader, shares some of that spirit, especially with the Bitcoin focus and his income strategy.
Tell us about that income strategy. How does he manage his own finances?
It's quite frugal, actually. He says he spends around 2,000 to 3,000 Sing dollars a month, maybe 4,000 max for his family, including pets. Almost all meals cooked at home.
And the income. Where does that come from?
Primarily, he says, from dividends from MicroStrategy stock and from selling covered calls on his Bitcoin holdings. So using asset to milk out cash flow, as he puts it.
Okay, but isn't there a risk of being overconfident in Bitcoin? How does he address that?
He pushes back by pointing to US dollar debasement. He cites figures like $37 million being printed every 10 minutes. His argument is that even if U.S. stocks go up in dollar terms, those gains might be illusory when you convert back to Sing dollars because the dollar itself is losing value.
So the real purchasing power isn't increasing as much.
That's his core point. He says he's only confident in one thing. They cannot stop printing. Bitcoin, for him, is the hedge against that inevitable debasement.
And his exit strategy for Bitcoin. When does he think you should sell?
Almost never is the short answer. Only for truly life-changing events. Getting a child into a top school, buying that absolute dream house or car.
Not for a holiday, then.
Definitely not for holidays. He emphasizes it's an asset to hold for a long, 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 long time.
But why the laser focus on Bitcoin? Why not other cryptos, like Ethereum, for example?
He has specific reasons. He's not keen on Ethereum's proof-of-stake consensus mechanism. He feels it introduces politics and counterparty risk.
Interesting. Anything else about Ethereum?
He also finds it too complex. The whole ecosystem, the fees, layer ones, layer twos, the risks involved in things like yield farming. Bitcoin, he says, is simple. There's nothing to do. Just hold it.
Simplicity is key for him.
Yeah. He sees Bitcoin as the new AAA asset, the benchmark or hurdle rate that other investments need to beat. He believes it will attract huge amounts from the traditional fixed income market, citing Michael Saylor's views on that $450 trillion market.
And he connects Bitcoin's design to its growth potential.
Absolutely. The finite supply, the increasing difficulty to mine, he sees this creating a power curve growth model. And interestingly, he argues this difficulty actually drives innovation in renewable energy because miners constantly seek cheaper power sources.
Okay, that covers the investment side. Let's move to the final major area, tackling Singapore's cost of living, another issue he's very vocal about, starting with housing affordability.
Right. His fundamental view is that the state owns all the land, so it could control how much HDB prices appreciate. But, he argues, the government currently benefits from the wealth effect of rising prices, which maybe disincentivizes intervention.
And he sees a problem looming with older flats.
A big one. He talks about depreciation becoming a major issue for potentially 500,000 HDB flats that are hitting the 40 to 45-year mark soon. Depreciation gets much scarier, he says, around the 50-year mark as the 99-year lease runs down.
So what are his policy ideas to address this? They sound quite radical.
They are. First, he suggests the HDB should strip out the land costs from HDB prices, make the building cost transparent.
Separate the land value from the flat price itself.
Exactly. Second, HDB should release its land sales data publicly for more transparency. And third, increase the minimum occupation period, the MOP, to maybe 15 years if someone takes a housing grant.
How would stripping out the land cost impact the market, in his view?
He thinks the current lack of transparency about land costs within HDB prices artificially inflates private property prices, too. It contributes to things like flipping condos quickly, the rise of million-dollar HDB flats, and even talk of Singapore's first $2 million HDB. Making land cost explicit could cool the whole market, make it more rational.
Beyond housing, he also has ideas about commercial real estate, particularly relating to food costs.
Yeah, he questions why restaurants and cafes in Singapore are almost always on the ground floor, level 1. He looks at cities like Hong Kong or Tokyo where businesses thrive on multiple floors.
Better use of space.
Right. And his concrete proposal is quite striking. He thinks 30 to 40% of the land around major town centers must be HDB commercial real estate.
So HDB-owned shop houses, essentially.
Yes. The goal is to directly lower rents for essential businesses like hawkers and local shops. He points out that big coffee shop chains, copium chains, as he calls them, and potentially hot money are buying up commercial spaces, driving rents sky high. He gives an example of a clinic paying $52,000 a month for just 500 square feet.
That's over $100 per square foot. More than many shopping malls charge.
Exactly. He argues rent is the single biggest thing we can control to help small F&B businesses, where rent can be 30% of their costs.
So HDB providing lower-cost commercial spaces would ease that pressure.
That's the idea. He even suggests maybe shops selling basic necessities should be directly government managed to ensure affordability. He recalls a time when hawkers apparently paid only $100 per month for rent. It's about bringing back some control over essential costs.
And he mentioned something about schools, too.
Just briefly, yeah. An idea for a centralized food model for primary schools, maybe like they have in Korea or in Indonesia, potentially lowering food costs for families further.
Well, that brings us to the end of this deep dive into Jeremy Tan's perspectives. We've certainly covered a lot of ground.
We really have, from, the future of money with Bitcoin and CPF to very personal investment strategies, and then right down to the practicalities of HDB flats and coffee shop rents.
It's fascinating how he connects all these dots: national finance, personal wealth, everyday affordability. He definitely offers a unique and often provocative viewpoint on Singapore's path forward.
Absolutely. His arguments really tie together the country's financial strategy, things like the CPF system, which affect everyone, and the basic cost of living. It challenges you to think about how these things are interconnected.
So the final thought for you, our listener, thinking about all this, the arguments about national reserves, the role of CPF, the nature of risk in assets like Bitcoin versus traditional investments, especially in a world with AI and constant monetary printing, how does it make you think about risk and protection? How might your own approach to savings and security evolve based on these changing dynamics? Something to ponder.